Hello and welcome to $3 TV. I am Fusaka Thakur.
And I am Ruchi Sharma. A lot happened in the world of digital assets this week and we are breaking it all down for you. So let's get started.
Well, Ethereum activated its highly anticipated Fusaka upgrade on December 3rd, 2025, marking the blockchain's second major code change of the year.
So the upgrade, combining two simultaneous hard forks on the consensus and execution layers, aims to improve Ethereum's handling of large transaction batches from Layer-2 networks.
Also, central to Fusaka is Peer DAS, a system allowing validators to verify small slices of data instead of entire transaction or blobs, significantly reducing computational load and cost for both validators and Layer-2 settlements.
So this upgrade enhances network efficiency, lowers fees, and strengthens Ethereum's ability to scale while maintaining security and finality across its blockchain.
Simultaneously, Strategy, led by Michael Saylor, continues its aggressive Bitcoin accumulation, holding over 650,000 Bitcoin, including 130 purchased at an average of $90,000.
CEO formally emphasized that selling Bitcoin would be a last resort only if its stock falls below net asset value and financing options dry up to protect Bitcoin yield per share.
Well, the company maintains strong financial discipline with debt manageable even if BTC drops to $25,000.
So Strategy has built a $1.44 billion cash reserve covering 21 months of dividends, aiming for 24 months.
Well, following Bitcoin's decline to $86,000, the firm revised its 2025 profit and BTC yield projections, signaling resilience amid market volatility.
Meanwhile, BitMine Emerging Technologies, led by Fundstrat's Thomas Lee, purchased 96,798 Ether last week, lifting its total holdings to 3.73 million tokens worth about $10.5 billion.
So the firm continues buying despite falling crypto prices, even as most digital asset treasuries retreat.
With Ether sliding 6% to just above $2,800, BitMine shares dropped 7.7% pre-market.
The firm is sitting on nearly $4 billion in unrealized losses, and Lee said the Fusaka upgrade and the halt of quantitative tightening by US Federal Reserve are encouraging accelerated ETH accumulation.
Moreover, Charles Schwab plans to add spot trading for Bitcoin and Ethereum in the first half of 2026. CEO Rick Wurster said on Wednesday at the Reuters Next conference in New York.
Well, he said that the firm will test the product with employees and then a small group of clients. The rollout will be staged before it reaches all investors, according to Wurster, and Schwab will start with internal trials. Access will then expand in steps, beginning with a limited client pilot.
In another important update, Japan is preparing to shift cryptocurrency taxation to a uniform 20% rate, aligning it with equities and investment trusts, according to Nikkei.
And the move marks the country's most significant crypto policy update in years and reflects growing acceptance of digital assets as mainstream investments.
The proposal places crypto gains under Japan's separate taxation framework, splitting the 20% rate between nationals and regional authorities.
Well, the change is also expected to be included in the 2026 tax reform package. Currently, retail traders can face rates as high as 55%, a long-standing barrier to domestic crypto activity.
Simultaneously, the Bank of Russia is discussing easing crypto regulations to offset the impact of Western sanctions, according to a report from Currencies.
And First Deputy Governor Vladimir Chistyukin said that restrictions make it difficult for Russians to use traditional currencies abroad, increasing the relevance of crypto solutions.
Authorities may remove the super qualified investor requirement for buying and selling crypto with actual delivery.
And this rule currently limits access to wealthy individuals with over 100 million rubles in assets or very high annual income.
Moreover, the UK has formally recognized digital assets, including cryptocurrencies and stablecoins, as personal property under the New Property Act, which has now become law.
And the legislation codifies what courts had previously treated through case law, providing stronger legal clarity and protections for all the crypto holders.
The bill follows a 2024 recommendation by the Law Commission, which said digital assets deserved their own category of property.
Well, advocates say that the law marks a major step in the UK's push to modernize its digital asset framework.
Meanwhile, China is strengthening its crackdown on virtual currencies, warning that rising speculative trading poses fresh financial risk.
And officials from major state agencies said that all virtual currency activities remain illegal and lack the status of fiat money.
The People's Bank of China also warned that stablecoins enable money laundering and illicit cross-border flows due to weak customer checks.
The renewed stance contrasts with Hong Kong, which continues to support crypto innovation. The city recently highlighted stablecoin development and hosted global crypto leaders at government-backed fintech events.
Well, that's all in this episode of the Weekly Wrap. This is Mritu Sharma signing off.
And this is me, Vishakha Thakur, signing off. For more such updates, do log on to our website www.weversetv.com or scan the QR code. Have a great weekend.